Hey everyone, it's Atticus Analysis, and I wanted to do a 2025 year in review. So in 2025, I had a performance of 70% in my portfolio. How did I do it? Well, following two rules. First, simple is better, and second, less is more. In retrospect, the three big trades that propelled my outperformance this year were really, really easy. And I wanted to talk about them and, see if we could learn some lessons going forward. So the first stock that really drove my outperformance was Nubank. And I bought this stock after seeing the Liberation Day sell-off. Remember that from the beginning of the year. And it reminded me of the first time I got involved in investing, which was Brexit back in 2016. Now, with Brexit, I didn't really know about individual stocks or anything like that. I wasn't really doing that at that time. But I remember seeing the American stock market sell off in response to something that didn't really affect the US that much at all. And so I thought, okay, I really want maximum exposure to US stocks. So I remember putting literally every penny from my bank account into a mutual fund from T. Rowe Price, just because I wanted maximum exposure, because I thought this was just the buy of a lifetime. And I was right. I still haven't sold any of those mutual funds. That was still a really great buying opportunity. But thinking about that, Brazil was kind of in a similar situation in that Brazil's largest trading partner was China, not the U.S. Brazil didn't have a trade deficit that needed to be, forcibly closed with tariffs, unlike many of these other countries that were being targeted. So there wasn't really this concern that Brazil was going to be crushed. Now, I think that what was kind of happening was that Nubank was kind of put in this basket of growth stocks, and growth stocks could be crushed if there was a global economic slowdown. That was a concern. And then there was also kind of a concern that Brazil is seen as a kind of risky area, and when there is large amounts of macro uncertainty, riskier areas tend to get sold off first. I think that was kind of what was driving the fact that Nubank was falling. But I thought, this is just a great solid company, great solid management. There's no reason for this sell off, so I went pretty heavy in Nubank. That was the stock that I picked as my big Liberation Day bounce back. Obviously, I could have picked stocks that were much better for that because almost everything bounced back pretty hard. But Nubank was a very fine pick, and I also got some Nubank calls, which did very well. I made sure to get them all the way out for January of 2026, so I just sold those because I wanted to give myself maximum time in case the recovery took a while. But yeah, it was very, very easy to see that Nubank wasn't directly affected, or at least the effect it was having was pretty minimal relative to other stocks. And Nubank, there's a lot of reasons to like Nubank that haven't changed. So that was a very, very easy trade. The second trade was BridgeBio. BridgeBio had a pretty was pretty easy to see that they were going to have a strong launch because they were updating us almost month by month when the launch began for their Truby drug. And then when the launch actually did come in, it came in at almost double expectations. So despite the fact that they'd given us all this transparency, analysts still hadn't modeled it at quite as good as it really was. People were very, very excited. And yet, despite that, the stock still sold off, in the following weeks following that report. It wasn't really clear why, although a lot of people were worried that Alnylam, which was a much better funded competitor, they were going to have their own drug launch in the space, and people were worried that would kind of crush BridgeBio competitively. Did that happen? No. And I think the moment when it became kind of a no-brainer trade was when they did a talk with Goldman Sachs, and Goldman Sachs just flat out asked them, it's like, okay, it's been 2 months since Alnylam launched. Are you seeing a competitive impact? And they said, nope, no impact. And that was when I decided again to load up on, making it, it was already my number one stock at that point, but, it became my number one stock because of the strong data from the first quarter. But then I added even more, and I added a bunch of call spreads. I think the stock was $38. I added a bunch of $45.50 January 2026 call spreads. which I also just sold. Those were up, well over 100%. I bought them for about $1.50 and sold them for $4.95. But I really went heavy into that when I saw that the bear case was basically dead in the water. I think that's really important to kind of understand is you have to understand the bear case. A lot of people, they fall in love with the stock and they see any criticism as just kind of pointless. There's no reason to listen to it. There's no reason to try to understand it. And I think it's worth understanding the bear case, even if you think the bear case is wrong, because when a piece of information comes out that disproves the bear case, that's kind of the signal that, okay, now, this kind of uncertain price action, that period may be over, because now that the bear narrative is dead, there's just no reason not to buy the stock here. And so when the CEO said that they weren't seeing a competitive impact from Alnylam, that was a signal to me that the bear case had basically been defeated, and there was no reason for the stock not to go up. And the stock basically doubled in the next few months after that happened. And the next trade that I did was FTAI Aviation. So once again, I had a bunch of FTAI after their really strong Q2 report. What had happened with FTAI was they had been the target of two short selling reports earlier in the year that had kind of slowed them down a little bit, but the short sellers were basically misunderstanding how FTAI did their accounting. They hired a third-party forensic accountant, said there was no merit at all to the short selling reports. But then, late last year, FTAI got hit with a third short seller report, but this one was, get this, an AI-generated short report. Yep, that's right. That's the time we're living in. You actually had hedge funds were short selling this company based on information from an AI-generated report, which caused the stock to fall about 10%. It was really the biggest no-brainer ever, honestly. I did add a bunch to FTAI. It was already a really large position. I made it my number one position after this happened. I added a lot, but it really makes you think about like the worm eating its own tail here, right? Because how did FTAI recover? Well, FTAI recovered in part because they signed, an AI agreement with Palantir, and then they decided they're going to launch a new product called FTAI Power, which is going to be using parts from used up airplane engines to make turbines to fund AI data centers, right? So the one thing that, FTAI is going to now help create AI, which was used to say, don't buy FTAI, basically. It's really kind of hilarious when you think about it. But yeah, that was the biggest no-brainer moment of the entire year, in my opinion, was buying FTAI when the AI-generated short report hit. I'm kind of surprised that it took a couple of weeks for FTAI to recover. But yeah, it obviously is doing really great today. Is still riding the high of that announcement. I have no idea how much of an impact that will have, but I definitely believe that FTAI, I've said in the past that I believe FTAI will hit $300 by the end of 2026. I don't think there's any reason for that not to happen. But yeah, all the other trades that I did made me less money, and they were more complicated. These three were very easy to understand, and they just worked. And I'm hoping that I can continue to have that discipline for this coming year. I'm hoping that I can try not to make things too hard on myself and just buy companies that are, solid, well-run companies that are basically, falling for no good reason or have some sort of very easily disprovable bear case, something like that. When you see something that is a great opportunity, you have to have conviction, you have to swing for the fences. And when you don't see something that has the opportunity, then you do nothing. You wait. You can stay in cash. You can stay in, some sort of risk-free, short-term bond, something like that. But you don't have to buy something if you're not fully convinced. If you're buying something because, a friend told you to buy it, some sort of guru that you're following told you to buy it, and you don't really understand the opportunity, don't buy it. Buy it when you feel the same sense of, conviction that I'm describing in these instances. You don't have to do a lot. 10 trades a year is enough. I think even 3 trades a year is enough if you have, you know, a little bit of risk tolerance, saying, okay, why would you go all in on just 3 stocks? I didn't go all in on just 3 stocks. You know, at no point did any of these stocks ever exceed a quarter of my portfolio, but the majority of the gains came from just these 3 stocks. So yeah, you really do not need to do a lot of trading. You really do not need to. Less is more. Simple is better. And just be patient. Just be patient and wait for the opportunities to come to you. So I thought that was I hope that was helpful. I hope you had a good year in 2025. Hope you can learn some lessons from this as you look forward to 2026. Thank you for listening.